Good afternoon, everybody. Welcome to TraderMerlin Show. It is your Wednesday edition. Hump Day it is. Hope you're all doing well out there. We are going to talk about economic data today, and more importantly, data confusion, at least from the data that was released yesterday, today, from the Fed, and other comments that have been made recently. I'll talk about that as we progress. We'll also look at the market overview, what's been happening out there from some of these indexes, and some of the other pieces we've been watching on this program. So I'm going to start things off with one piece of housekeeping. Someone sent a question. I think it was Monday's show. I had mentioned about Jim Cramer saying some negative things about NVIDIA, and then NVIDIA stock popped. And I actually went back and found it for you. Here it was from August 14th, so that was Monday. It says, "We are finally seeing some articles about how toxic NVIDIA is. I like that." Now, of course, he backpedaled there and was like, no, I think it's good because you can buy it at lower prices. But that was one of the ones that people were giving him a hard time for, was his call on NVIDIA, or just that comment about NVIDIA, saying that, bad comments being said about it. Therefore, he liked that. And of course, here's the chart of NVIDIA, so you can see that was the day of that release. It's almost like the institutions are watching him when they make comments, or when he makes a comment and it just goes the opposite direction on purpose. I love it. But today, down a little bit for NVIDIA, down 1.03% on the day. But anyway, that was just my housekeeping piece, just so we had that one done and out of the way. And of course, there was other stuff, but that was the big one. So Les sent in this question. That's what we'll start off today with. He says, with the Fed minute released today, what would be covered that was not already been asked during the July 26th press conference? So what makes this different is typically you have the FOMC meeting, right? And that's where Jerome Powell goes out there and he reads a pre-written document. The press conference, he makes a little bit more in-depth comments, and then he goes off the rails a little bit depending on what the questions are from the press and the media. But that's his perspective. That's them asking Jerome Powell. The FOMC meeting minutes, which came out today and did, in my mind, is what kind of spooked these markets a little bit. That is getting the summary of opinions of all the people in that meeting. What were they thinking? Who was dissenting? Who was not, dissenting, excuse me. Who was creating issues in that room? Who was supportive of the current policy, et cetera. So you kind of get a sense as to what the pulse is for all of those voting members of the FOMC, not just Jerome Powell, who, of course, is the front man. Now, today, the minutes came out, and it was interesting. There was some talk in there. Let's look at the indexes here as we go. Most of the panel felt that they see more inflation ahead, which I think is an interesting one. When we look at the CPI numbers and the PPI numbers, they've been coming down. However, these members, most of them are saying that they see inflation starting to rise. Now, I'm going to go here to the FOMC rate statement. Here is the probability of a rate increase for September 20th. So we've got another month or so till we get to this one, but 88% right now is what the number is, 88.5 to be precise. That is the current hypothesis from traders about what they're going to do with rates. That's going to be a no change at the next meeting. Now, what was interesting is in the meeting minutes that we got, we actually saw that there were two that said that they didn't feel we should be raising at all. Those are my brethren over there. As you guys know, I was saying that we should absolutely not be raising here right now at the previous meeting. So this was interesting to see that you had two members dissent there, say, no, we don't think you should be raising. So at least you get a sense as to there were people feeling like raising would be too aggressive, yet they raised anyway. So what was noteworthy from the meeting minutes, at least for me, was you had most people expecting there to be more inflation going ahead, and two members saying that we shouldn't raise. Now, what we're going to get here is most likely a pause at the next meeting. And the question is that justified? If the FOMC members are feeling that there's going to be more inflation ahead, it's going to start to rear its head going forward, then maybe we do start to see this tick back up here in the coming weeks, and a more increased probability of maybe getting a 25 basis point increase at the Fed September 20th meeting. Now, I personally don't believe that we should be raising rates, at least the next meeting. I think we already raised the previous one. Let's hold off a second here just to see what that data does. Lisa says, I must admit, I am of the mind of the 11 percenters. Well, it's a trade-off here. And again, there's no right or wrong answer. History will tell, or time will tell if you're on the right side or not. You're probably on the right side if you're that 11 percenters. And for those who don't know what I'm talking about, because you listen to the podcast, right now about 11% of the probability for Fed funds futures is at the September 20th meeting, we will see a 25 basis point increase. That's where that 11% comes from. So there is that mindset of, hey, let's just make sure we crush inflation, we squash it out. Let's not even be any second guesses there. Let's just keep on raising until it's abundantly clear that everything is done and over with. Great. On the one side, I would agree with you. We should be doing that. But for every action, there's an opposite but equal reaction. And that reaction would be a tighter labor market workplace, right? You're going to have more pressure on employers. You're going to have the cost of capital going up. That's going to put pressure on the housing market, which is a huge factor of GDP. A lot of dominoes fall regardless of which action you perform, whether you pause the next meeting or you raise, a lot of it. So, I think raising is probably a good idea to fight inflation, but I think that the side effects of continuing such aggressive raises might be not worth the risk. So I personally would put myself in the 88.5% camp here, which is say let's pause the next meeting. Now, from there, let's quickly look at what the earnings were like today. So as you know, it's a retail kind of week. We have a lot of retailer companies reporting this week. You got JD.com reported today. You had Tupperware, great company. I'm being totally sarcastic. And Target, right? Target was the big one. You can see here, Target came out with really good earnings. They were supposed to come out with $1.41. They came out at $1.80. That's a beat of about 27%. And on the day, let's go look at old TGT. Here is TGT. So not the best looking chart. At one point, Target was up significantly. If you go from the Friday's or Tuesday's close to where we opened up today, they were up about 8% and then basically sold off the entire session. Now, why is that? This goes back to my comments about the beginning of the year when I was saying that I think the third and fourth quarter might start to slow down a little bit, and that's exactly what Target said today. While they posted good numbers, everything looked great, they did say, going forward, our full market year forecast is going to drop. They cited rate increases. Conveniently enough, right? Pointing the finger right at the Fed going, you guys are raising rates. That's going to hurt our business. Now, of course, some of the problems that happened at Target were because of some of their choices in marketing campaigns and things they chose to do, like Bud Light. But I don't think that's the killer for that business. Now, if I look at this long term, let's go look at Target on a daily time frame. You got to look at this one and say, well, where potentially would be a good buying opportunity if you were thinking long-term that Target would be okay. Now, I personally, right now, am not of the mindset of buying Target just because if they're coming out with a weaker forecast for the third and fourth quarter, and I still feel that there's some rocky road potential ahead, I'm going to hold off on buying Target, although I do think they'll be fine for the long haul. So we'll see how this pans out tomorrow. We've had just kind of weird days. 2 weird days in a row. That really aggressive down day yesterday and then today, big gap up followed by a big sell-off. Now, the reason I put data confusion is, you get these great earnings from Target and all of a sudden they're going, well, we don't think we're going to do good in the future, so we're going to lower our forecast for the year. And that all of a sudden has a lot of investors confused. Then you look at the retail sales number, which came out yesterday. Didn't get a chance to talk about that one. I've been abundantly busy. Here is the retail sales number that happened yesterday. They were expecting a slight tick up from 0.3% to 0.4%. We came out at 0.7%. And that's great. I think all in all, retail contributes 1% to the overall GDP, or contributed 1% to the overall GDP number. So that is going to have some impact. And you can see as I zoom in here from, where we were back in 2005, now we're zooming into 2020 and on, you can see we've been slowly increasing. Let's go even closer and zoom in more so we can see the rates. There's your big pop. So we've had this kind of 3 consecutive month decline followed by a nice pop to the upside, definitely exceeding expectations. So, all right, I've got Target saying that the rest of the year may start to look worse. I have retail sales numbers saying, hey, things are starting to look good. People are spending more money. I've got the Fed saying, well, you know what? We all expect there to be more inflation going forward, but we're probably going to keep rates right where we're at. So at this point, I feel like you have a lot of confusion in the marketplace. And what does that typically mean? That means bad for the markets. Typically, what you don't get is strong trends either way when there's mass confusion, whether it's confusion about an earnings announcement, a political issue, or just macroeconomics. So let's go and look at our broader markets here so I can just dive into that and get that out of the way. Ellen says, all the LGBTQ controversy with products and books of children has turned a lot of parents away from stores lately as well. Yeah. And we talked about that where it's like the NFL where they had a whole bunch of people, fans just up in arms, disgusted at the NFL because they were kneeling and, let's not make it a religious thing. Let's make it or a political thing. Let's make it sports. Target may have made a mistake depending on how you look at it. May not. Maybe it's just inclusion. Same thing with Bud Light. And you're going to lose some customers. And on one hand, you might actually be gaining others. But the Bud Light was a pretty big miscalculation of your fan base there. Ultimately, what I think is down the road, customers will probably forget about it and go back to their Target shopping addiction. There will certainly be some people that find other places to go, but where are you going to go? Walmart? I think Walmart right now is stepping back, watching all this, going, all right, let's not do any ad campaigns like that. But yeah, there will definitely be some losses to that. And they cited a little bit about that, but I don't think that was the big piece that really hurt them this year. So we should not expect Santa Claus rally. At this point, Lisa, I don't know. I just don't know. Who knows where it's going to go? At the beginning of the year, I was definitely feeling very bearish for the tail end of the year. Right now, I love the graphic I started with today because it really does echo my sentiment, which is I'm trying to use economic data and technical data to look at the longer term picture and see where this thing may be going. I don't see a lot of clarity, right? So let's go look at that S&P 500. Here is the ES. You look at it right now, I should be liking this, right? We're in a big uptrend. We've got a giant pullback into an area of demand that we've had mapped out for a couple weeks now. I should feel jubilant to be buying the S&P right now, but I'm not. I almost pulled the trigger today and was like, you know what? I've got a lot of options positions expiring on Friday, so I'm just going to let those go and kind of step back and wait and see what happens. But typically, if I had a little bit more dry powder, I would probably be going long on the S&P right now because it's deep in that area of demand. However, it's not looking good over the past few weeks, right? So I don't get any real clear sense of direction from that S&P. Grand scheme of things, I think it looks great. If I look at this on a weekly time frame, here's your weekly chart, I got to feel bullish on it. We haven't been making new lows. We've been making higher highs, and we responded to this high back here. We talked about hitting this overhead high that we achieved back on March 28th. Well, we hit that one again, and now we're selling back off on the weekly. So, the question for me is, how deep does that pullback go? I see VB over here saying 4,300. There's a gap. All right, let me put a line at 4,300. Get some of these lines off this chart. Put that one down here at 43. So when I go back to the daily here, you can see that one a little more clearly. So back to the origin of this gap, and I would agree with you. I think that's a very logical place for this to pull back to. And if I was going to take a shot at it right now, which part of me wants to, I really do. I really think like this could be a nice potential bounce point here. I just don't feel comfortable because the data is just so unclear. Everything seems to be just kind of a mix and hodgepodge of data, positive and negative. So I would agree with you. I think you've got a couple pretty clear demand zones. One we're in right now, and then the other one is the origin of this last big gap up we saw on June 9th. And that could very well happen. How big of a drop would that entail? Well, from current levels to, let's say, middle of that zone, you're looking at about a 3% decline. Not too bad, right? That's just a couple days. Yeah, VB, I got you on that daily. Yep. Typically don't see too many gaps on the weekly time frame anyway, but yeah, I knew it was on that daily time frame. I just wanted to put it there to map it out for everybody. So I agree with you. The question is, where do you put yourselves in this camp? We're all going to be different. I personally just feel like this is going to bounce here, but I don't have that strong a conviction. Normally, if I see something in a demand zone, in a strong uptrend like we have with the S&P right now, I'd be pretty comfortable buying, put a stop loss down below it, and let it ride. I just don't feel that comfortable right now. I hear you watch those headlines we talked about yesterday with the Michael Burry thing, right? Markets were doubling down on that. The media was doubling down on that, and it says, today, they said, the quotes were, today, Michael Burry opened a huge put position. It's like, that's fraudulent news. That you don't know when he opened those put positions. There's no information or anything that says it was today. Again, he's probably out of these positions already. So I think that precipitated a ton of fear in the markets, and that's part of the reason we're getting this. You've got a little bit of confusion on the data. You also have, people going, oh, Michael Burry, he was right with the housing crisis. Well, maybe he'll be right again. Mind you, he's been wrong a lot. He makes a lot of calls, and he's wrong quite a bit. But he's also got billions of dollars to throw around in his hedge fund, so must be nice. So I'm probably not going to pull the trigger tomorrow. I'll wait and see how it happens. I got a ton of things going on right now, and I'm a little bit too busy to focus on it, at least from the day trading perspective, which is what I want to do. We'll have to wait and see. Let me start at the bottom, work my way up to the top here. Crude oil was the big, actually 3 huge down days in a row. It responded to the overhead supply, just not the way I thought it was going to be. I thought we'd actually stop at it and then rip back down. Here we are ripping down now, and the question is, where will it stop? We do have a demand zone, or at least an area that's been hit multiple times just directly below us, right around, call it 78.75. We are currently at 79.38, so about 50 cents away from that little level. After that, you have to start looking deeper into it. But again, I feel the same basic premise as the S&P. You've got a pretty decent uptrend, at least from June to where we are today. My guess is pullback and then start to rally from here. Yep. Charts are the only way to go. They really are the best ones, but sometimes the overwhelming economic data will prevent me from making a trade that I wanted to make, like this S&P 500. I think this, on any given normal day, this would be a great potential long trade tomorrow once you get confirmation that it starts to move back up, put a stop loss down below that zone, and you're good to go. By the way, that just so you know, the bottom of that zone is about 44.11, which we've had there for quite some time. Let's see. I'm going through here real quick. Just to add on to this was from, I think this is from Scott. Actually, no, this is from Les. I didn't change the name here, Les. Sorry, copy and pasting from the YouTube channel. This is from Les. He says, a year ago, I heard that major corporations could purchase financial reports before the official release, but they couldn't act on it until after the news release. More recently, I heard this was not true. I will say that is not true. I don't think that that would be way too much insider trading, and regulators would be all over that. Let me just put your name on this one. There you go. There's Les. That's not true. Now, if you take a step back and weed through all the BS that the SEC tells you, and the SEC tells people that they are on top of all people in the financial markets, that if a CEO of a company makes a phone call to his golf buddy and says, hey, Ken, you should check out this stock. Man, we're going to have huge earnings tomorrow. Load the boat. According to the SEC and the regulatory agencies, they're watching all of that and making sure it doesn't happen. I call BS. There's no way to track all of that data. Plus, there are an infinite amount of ways that I could secretly sign language to you information and clue you into news releases beforehand, days or weeks before, without anybody in the world ever knowing, with just a simple code that you and I establish offline around no microphones. It could easily be done. So to say that these managers don't have access to information before us, I would say that is absolutely false. I would say that corporations, most likely hedge funds and investment firms, have access to information long before you and I see it. When you look at an earnings statement, right? So today you had Target come out with their earnings statement. It's not like they woke up today, 1 hour before the market opened, got everybody in the room and said, okay, let's print all the documents. Everybody ready? We got to hammer this out right now. No, they've been working on that document for weeks. And anybody who's involved, touching that in any way, shape, or form, has access to know exactly what Target's numbers were going to be today, even what the forecasts were going to be going forward. So if I'm somebody like Goldman Sachs or BlackRock, I will do my best to get somebody on that board of directors, in that finance department, in that accounting department, give them some special little perks for just a little tidbit of info. How's it looking over there at Target? What are they thinking? Sales numbers good? Now, you and I can't do that, right? You and I cannot do that. Unfortunately, they can. And, what are you going to do about it? It's just a part of the game. It's like saying cheating. I see someone talking about baseball hand signs. Yeah, it's like cheating in baseball. It happens in probably every game. There's some small element of cheating going on, that somebody's trying to use something, some fan in the stands to read signs, or some little thing to give anybody a competitive edge. And unfortunately, we are all smaller fish, so we don't get that information like these analysts or hedge funds. So I don't think they buy the reports. That's too obvious, right? If I'm the SEC, all I have to do is say, who bought that report? Let me come after you. Oh, clearly you bought these shares before. Then I'm going to shut you down. But I think I made a point years ago, or not years ago. Well, I guess it is years ago at this point, when Donald Trump was president. Remember, like one day he would tweet out, China, I hate China. We're going to crack down on them and put a 50% tariff on all their goods. And a week later, China is really good. We're looking forward to working with China. They're doing great things. We're optimistic about trade deals with China. And it was flip-flop. Every couple of weeks, it was good China, bad China, good China, bad China. And all he would have to do is use the word in his tweet. And he'd tell this to his good buddies, right? And again, I'm making this up just to show you how simple it would be. But if he ever used the word huge, right? If he used the word huge, that means he's going to say something positive about China. If he used the word best, that means he's going to say something negative. So if you're an analyst, you just sit there and you're watching his Twitter feed, right? Or a friend or family, and all of a sudden he says, we have some huge news about China. Huge news. All right. So you know that China That's huge, means good news. So all of a sudden you load the boat, make a ton of money, ride along, and then he comes out a couple of days later and says, China's the best country. They're the bestest. And you'd hear that. You sell all your positions you built based off that. When he, a couple of days later, issues a bad statement saying China's going to get 50% tariffs, and it comes crashing down. All I have to do is come up with a simple word, right? That's all you have to do. Could be anything. Could be blinking an eye on a CNBC broadcast or thicking your teeth on a CNBC broadcast. Anything. So don't believe that these guys are not cheating. They all are cheating. Anytime you have the amount of money at stake that's in the financial markets, you're going to have cheaters. You're going to have people that are trying to take advantage of that system all the time. Even not just on institutional level, but even the smaller fish, wherever they can. A lot of people are going to try to cheat and steal and manipulate others to do their bidding for them. Analysts used to get info before us. Yeah, I think they still do. But again, those walls have gotten a bit taller between analyst and trading departments because obviously insider trading things. But it still happens. I mean, just type in SEC settlements or SEC lawsuits. You'll see just tons of it. Insider information, nonstop. Who sits on the Senate Subcommittee for Agriculture, Nutrition, and Forestry reported multiple agricultural trades through June and all in the range of 1,000 to 15,000. There was one guy, who was it? I just saw this article. It was something to do with the futures markets, and the guy was just shorting all the futures markets for commodities because this guy was responsible for making the rules with regards to a lot of the commodity markets out there. I have to go find that story. Maybe I was just dreaming in my head. But again, anytime you have an elected official who sits on the board of finance, on the housing commission, anytime you have any official in one of those seats, they have unlimited power and manipulation potential, right? So if I'm on the housing commission board for the United States government and I see big developers coming through wanting all this money for grants to build all low-income housing, well, I can go and find who would benefit from all that, buy a bunch of those shares, and then I'll give them approval. Or I can short those companies and deny them and watch the whole thing crash. So yeah, it's unbelievably corrupt. It's horrible, which is why I like our approach, which I think you would agree is much more of a, was it Tuberville? Thanks, Lisa. Yeah, I think that was right. I want to go back and read the headline, but I remember just being what? You gotta be kidding me. You and I think are in a good position here because we are the mosquitoes. We're small fish. We're insignificant. So I try to keep it that way. I think the bigger that you get, the bigger footprints you leave, the more likely somebody can see you, and the more likely they'll be gunning for you. Nobody's gunning for you and I, trading $100,000, $200,000, $500,000 account. It's not that big of a deal. It's when you get to the $50, $100 million, then you become a target. All right, let me see. What was it that you wrote there? Senator Tuberville has just disclosed $250,000 in futures trading in wheat, corn, soy, cattle, August 14th. Yeah. But if I'm not mistaken, he was actually doing things to support just the contracts that we see, those commodities that he was in. And then that's where I think the problem is. Yeah, exactly. We're the pilot fish. True. Nope, he didn't know anything, did he? No. It was all... Anyway, to go back to the original question here from Les, my thoughts are they have information. They have it all. They don't need to buy a report. They've got connections. This is why you... As a company, you put your people in positions. Think of the U.S. government, CIA. How many spies do you think are around the world in other global governments? Right? So they're going to train some kid here to learn Russian, go live in Russia, and deep down he's actually a U.S. spy. Same thing in El Salvador, Nicaragua. You have spies everywhere, so the U.S. government knows what's going on all over the place. Financial firms are no different. Financial firms are just a different way of saying government. They control the markets, they control a lot of stuff, and they have people in all offices. Anyway, going to get me on my rant today. I'm going to have to wrap up here soon. I'm hoping this guy will... I've been dealing with an absolute nightmare situation with a locksmith. It drives me absolutely crazy. Oh, this guy, one of the biggest clowns I've ever experienced in the locksmith space, and I'm dealing with him right now. All right, let's go look at the run through for our top 8 markets. Crude oil. We had that line drawn at 78.68. We're coming right back down to it today. Pretty aggressive. We'll see if that holds tomorrow. Down 1.99% on the day, closing at 79.38. Russell 2000 also down over 1%. And continuing. I mean, they haven't seen a green day in quite some time. I think out of the last 15 days, 12 or 15 days, we've had one green day up. Not too good. Now, technically, look at the longer term picture. It just looks like a pronounced pullback. That will happen. The question is this pullback or trend now dead, right? Did we make a new pivot or swing low? Some would argue that we have. Others would say we haven't. Bottom line is I think you've got this thing in a pretty big free fall right now. 1862 is the number I've got mapped out there as a potential stopping point. NASDAQ also down over 1%, 1.09. It hesitated at that demand zone that we had there. Gone. Aced right through it. And now you're going to have to be looking down here a little bit lower. I think that in order to line up with what the markets are doing, you're probably looking at it closing this gap, which is a bit further down on that NASDAQ. So hopefully for anybody who's long on the NASDAQ, I actually am long. Well, I sold puts. So I sold my puts pretty much at this level. So what I'm hoping that is by Friday, we get a little bit of a bounce or we stay above that level so that none of my puts get put to me. If they do, well, we'll have to deal with that on Monday morning. All right, that was the NASDAQ. Bitcoin, nothing exciting there, although I did see some pretty interesting graphics and thoughts on Bitcoin. I'll see if I can include those into the Friday show. Right now, just continuing on, it's kind of drift lower. Nothing really that exciting. You did see an analyst today, I think it was on TV, saying that he feels Bitcoin's going to 150,000 very soon. I'm like, He says, if we get that Bitcoin ETF, we're going to 100,000, 150,000. I don't think we'll go that high. I do think money will come into it. We also had legally the first European spot Bitcoin F traded live today. Bcoin, I think, was the name of that one, if I'm not mistaken. I think it was actually Bcoin is that Bitcoin ETF. It's by Jacoby out of England. So as listed on Amsterdam, they now have a spot Bitcoin ETF over there in Europe. Hopefully that will put pressure on our agencies to do the same here soon. S&P 500 was your best from our three indexes, but also we already looked at this chart. Down in an area of demand, down 0.76% on the day to 44.20. Top three, podium time. Gold continuing to drift lower. And this is hurting me a little bit because of silver is obviously drifting lower as well. I've got the 2150s, the 21s, and the 2050s on SLV. We'll see how those all transpire. I'm sure I'll be executed on my 2150s and 20s, or 2150s and 21s. The 2150s we'll have to wait and see. So here we go with gold. Does it come back down and enter this demand zone? It certainly does feel like it. This is kind of a wide zone here. I personally think it should be truncated down to something like this. Just a little bit tighter of a zone. And I do think we're coming right back down into that one. Just feels like that trend is your friend to the bend at the end. Pulling back into that area of demand. Didn't want to see it. Thought we'd actually start to see a little bit pull back up. But we broke those lows right around 1943. And continuing lower. And let me just show you SLV here so we can see what that looks like. We finished at 2056 today. So I have another batch that is at 2050, but each of these three lines, well, pretty much these three lines, is where I have my strike prices. Actually, higher up. 2150, we'll move it to the 21, and then you have the 2050s, which we're at right now. So there we go. I'm going to have a lot more silver most likely here coming this Friday. Now, here's some of the reasons why these markets did what they did. Here is your Wednesday session for the dollar index. Showed some nice gains, rallying strong. You're at the top of that supply zone. It feels like, given current trend, that dollar is going to continue on up here. I would make the same argument I did with S&P. It's an overhead supply level, which should act as a resistance point, and this should sell off. But it's already hit it once and really didn't pull back much. Just feels like great strength in that U.S. dollar. That means that top level of the dollar index, right on 103.56, most likely will be broken, and we'll be seeking out these more recent highs. And when that happens, all of my head and shoulders pattern will disappear. And finally, yields. Oh, it's about yields. Today is the green candle right here, not the newest one because that's the new session, but this green candle right here reflecting our current, Tuesday. Am I Tuesday? Wednesday. Wednesday's trading activity, rallying up, breaking the highs we achieved on Tuesday's session. 4.25 is where we're at right now. And again, I'm going to stick to my guns and say 4.33 is where we're headed. That'll probably be your next big stopping point. Again, dollar up, yields up, bad for equity markets, as you can see from here. All right, one last one here. What time is it? Let me break things up. Oh, boy. Man. Okay, so here is the question that came through from John. And with all that's been going on with Hawaii, which is just absolutely devastating, and all the thoughts go out to all the people out in Hawaii, just a terrible situation. If you've been watching some of the video footage, Hawaiian Electric looks like it's going to be in a world of litigation here soon. Now, John says, how about buying Hawaiian Electric Co.? So let's look at OHE, which, I got to strongly caution you against this one. I know what you might be looking at is you're looking at, let's say, the weekly time frame here. You're like, all right, well, the lows of this thing were back down around $12. It's been trending down, so certainly a little bit weaker, but the island's not going to go without power, right? They're gonna rebuild and have energy there at some point, so wouldn't it make sense to buy back into Hawaii Energy? There is the potential that this wave of lawsuits that comes through and hits Hawaii Energy could shut them down, meaning they're forced into bankruptcy and then they'll start back up as something else, but it could absolutely erase Hawaii Electric Industries from the publicly traded side of things. So I personally would say don't do anything with Hawaii Electric. It's too risky. If you can find options, this is obviously not the most liquid security out there. Before all this stuff, Hawaii Electric would trade about 300,000 to 400,000 shares a day. The last 3 days have been 23 million, 30 million, and today 35 million. So volume is increasing dramatically. I personally just say stay away from it because there's very low liquidity on this thing. Normally, it's in full-on panic mode right now, and we're a ways away till we see any litigation stem from this. But I think that's a very high probability for Hawaiian Electric, and it's just not worth the risk to try to catch that falling knife, in my opinion. I know some of you guys are gamblers, want to take that chance. Okay, fine. I would just be very, very careful with this one. I wouldn't touch it personally. And I don't even know what the option chain looks like on that one, but they provide 95% of the electricity of the island, can't shut down, nationalize. Well, what they'll do is, because when all the lawsuits come in, they'll declare bankruptcy, but they'll just start right up or sell the assets to some other firm, which will start it right back up. You're right. And does the government come in and take over? As you say, nationalize maybe? Possibly. I don't know, but I still think there's more downside risk potential. If I have to look at downside versus upside risk, I'd say more downside risk for HE than upside. They can go bankrupt and still provide power. Yeah, they would be going through the bankruptcy proceedings. The only reason they would go through bankruptcy proceeding is to void out all those lawsuits. Terrible, terrible thing, all these people. I mean, you look at it, it sounds like whoever would sue them, and I assume if I lived in Maui as well, I would probably be suing them as part of some class action lawsuits because the video footage is very telling. I mean, those winds were so intense. And I just saw, telephone poles just waving like toothpicks out there. It's crazy. They probably should have cut the power to be safe, knowing that those power lines are going to go down, which, again, spark these fires. And at least they think. There we go. $200 calls will not hurt. I don't know if anyone would ever sell you $200 calls. I mean, how much are you going to pay for those things? It's going to be deep, deep, deep out of the money if you're buying those things. All right. So that was one about Hawaiian Electric. I had a couple other ones here that I need to get to, but I have to wrap up. I need to make some calls and get this guy here to fix my truck, which is literally dead in my driveway. So let's go to your economic calendar and earnings calendar for tomorrow. There still are a bunch of retail companies planning on shutting down power if hurricane strengthening in that direction. Yeah, well, a little late now, right? They should have done that earlier on, but hey, I don't run the damn grid. Since you had Target today, Walmart comes out tomorrow with Applied Materials. You have Ross Stores as well, so a bunch of retailers. And then if we look at the Forex Forex Factory calendar here, since I have time to put it into my slides, here's what you got cooking for tomorrow. You have unemployment claims and Philly Fed Manufacturing Index, natural gas storage, and that is most of your stuff for tomorrow. Now, if you're trading the British pound, you also have the retail sales numbers coming out tomorrow. So that's going to do it for me for today, guys. I need to wrap up and hopefully find some way to get my truck fixed so I can now run. Unfortunately, it's not in any state of that, but we will hopefully get that done here soon. So thank you guys for the patience and knowing I did a short little show here today. You can email me at TraderMerlin@gmail.com. Tomorrow we'll have Jerry Baldwin on the program, probably talking about short-term trading of futures. That said, I'm out of breath. Probably need to go comb my hair, shave, and I will see you guys tomorrow. Take care, everybody.